Morning, everybody. AM Pat Jack covering equities. This is Bob Iacchino along with Mike Arnold from Path Trading Partners. Let me just go through the list of what Mike's going to cover after this Trump-induced rally. I feel like we've been saying that since November 9th. In fact, we have been saying that since November 9th of last year. Another Trump-induced rally. New highs in the S&P reached 21,000 in the Dow early this morning, so there's a decent amount of rallying going on and a decent amount of dollar strength. The probability of a March rate hike shot up from about 35% yesterday midday, 39% in toward the end of the day. It's up to 71% now this morning. If you check the Fed watch tool at the CME Group's website, stocks, Mike is going to look at the price action of HP, which again is Helmerich & Payne. It's not Hewlett Packard. PSX, which is Phillips 66. PRXL, which is a biotech company out of Boston. They're a biotech services company. CSX, a rail stock. Vulcan Materials, a material stock. Asphalt, concrete, things like that. NVDA, chip maker. WFC, which is Wells Fargo, obviously one of the mega banks. LOGM, cloud services company, essentially provides services where you can access a computer from a remote location. Tesla, we all know Tesla, our favorite electric car company. And last but not least, a new one on the list, NX. NX is a Houston-based building products corporation. So VMC and NX benefiting obviously from the idea of a wall and increased economic activity in the building sector. Let me turn it over to Mike to show you what he's seeing on these stocks.
Okay, thank you very much, Bob. So we were looking at HP. Originally we were looking at a double bottom. It's now a triple bottom, quadruple bottom. It's turning into a horizontal channel. The probabilities for lower prices have gone down, that we were still seeing if that would happen. So this one's now officially coming off my watch list for the time being. PSX, we were originally watching it when it was still a smaller double bottom. Now it's formed actually more advanced double bottom and the 20s out of the way. So if we get a close above 80.39, that will trigger with a 2-target trade. So we'll keep watching that one. PRXL, watching for a gap fill. We've now broken down out of this consolidation. It may still fill the gap longer term, but I'm taking it off my watch list for right now. It's not an immediate thing I will be keeping an eye on. CSX has reached up for the hit the next scan level higher, 49.51. Today's high didn't quite get up to the next one, 49.89. So that's next target we'll keep watching for on another push up. VMC triggered the double, got caught on the 50, did not get the stop reduction yet. These stop levels are still very far away. This actually gives a very good, since reward to risk has been tough to get in on this one, this could still be entered. The stop levels are, if it closes above 31.66, the trade's invalid, or if it trades intraday above 133.83, it is officially off the table and stopped out. NVDA still has not triggered a gap down on this very large double, did not trigger. It's rolling back over, so we're going to keep an eye on that. Ran back to our rotation zone, but nothing else to do on that. Wells Fargo, the lower probability double because the rotation zone was in the way, actually became a lower probability double that got stopped out and hit the next 2 GAN levels higher. Nothing else to do there. It's coming off my list. That is a play that's officially stopped out on that gap. LOGM triggered its double, rallied up. Now it's trading about 96.03. The stop levels are 103.99 above that on a closing basis, or 106.03 on an intraday trade basis. This pullback also gave better reward to risk to get in. So nothing else to do there, and it's still not stopped out. Tesla reached down, it hit our first target, reached down towards the second one, gapped up, and we weren't shorting this, but it did hit the stop reduction target and the first target. So it's still in the play with the first cross declining rotation zone to hit the second target, or possibly even go lower for anybody who's looking to accumulate it. Finally, NX triggered a double, pulled back yesterday, now rotating back higher. This is only a single target trade. Target being 2089 for the one target, stop reduction area being 2058. So we'll keep an eye on this one. The stops would be on a closing basis below 1922 and on an intraday trade basis below 1907. That's all I have for you. Back to you, Bob.
Thanks, Mike. For those of you that feel like this market is crazy, this market can never go down, don't ever think that the market can never go down, but also notice that it will go up until it's finished going up. Even Warren Buffett yesterday said that he doesn't feel like people missed much in the rally yet. So don't be surprised at what a market is doing. Just notice what it's doing and trade the price action. That's all we ever do. News doesn't matter to us at all. You can reach us at support@Pat Trading Partners. If you like these videos, please click like, click subscribe, and then click the little bell icon so you can get alerts from YouTube as to when we post a new video. They are time sensitive. You might be noticing that by now. New Money Path Podcast is out. You can find the podcast by typing in the Money Path Podcast into your iTunes or Google Play search bar, or you can find it at our website, which is, again, pathtradingpartners.com. Follow us on Twitter, path_trading, like our Facebook page, which is pathtradingpartners.com. And again, feel free to leave a comment if you'd like. Cheers, everybody. We will talk to you next time.